I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, co-founder and CEO of InkResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. Welcome back to the show, Ted.
It's great to be back, Jim.
Ted, what are American insiders doing right now?
American insiders, Jim, are selling this rally that we had up until, at least until today, based off of tax reform hopes and the Fed meeting and a new Fed chair. They've been picking up their selling, and we're used to insiders selling in the American market. They've been selling for years, taking their profits as the markets kept going up. So that in itself is nothing new, but we did get a pretty reliable sell signal. It's not infallible, but reliable sell signal in the industrials area, where our industrials indicator dropped below a key level, 20%, meaning there are 5 stocks with key insiders selling for everyone buying. And when that happens, ever since the end of QE, it's always been usually been a rough patch, not always, usually been a rough patch for that sector. And so unless you believe that the U.S. market can move higher without a pullback, without the industrials, it's a warning sign. So so far that signal's been playing out since we issued it, and I see the industrials are down quite a bit today. They're down over 1%. We'll see, of course, if the plunge protection team can come in and rescue it at the close. But our cautious signal that we sent out to our clients a couple of weeks ago now seems to be playing out. But when I mean a rough patch, we're talking central bank world rough patch. So this has been like a 2 or 3% pullback in since QE when this signal worked. And but in the old days, Jim, you and I may remember, in the old days when you had a correction, the stocks would go down 5-10% or even more. Boy, if we ever got back to those days, I'm not sure a lot of new investors would know what hit them.
Does the market need something like a 10 or 15% correction?
Well, the only people who really need that are people sitting on cash, and I think that the market really needs to be set free of the central bank intervention and manipulation. And right now we're being held hostage by 2 factors. The main one being the European Central Bank, which continues its ridiculous asset buying policy, and the other factor being, very low interest rates with the Fed, dragging its feet, raising rates, and we have enough history to show us what happens when the Fed dilly-dallies in raising rates. You get bubbles. We had that in the last major meltdown, great financial crisis, Greenspan, tiptoed with a quarter point here and a quarter point there, a quarter point here, and this went on for 5 years, I think, or maybe not 5 years, but it went on for many years until he retired, and then Bernanke kept up the same thing, and lo and behold, while this was going on, this little song, we were having a full-blown housing bubble. So, is it going to happen again? It could be. And, we'll just have to see how it plays out. I think that the U.S. market, is due for a revaluation. But, when you have central banks, believing that they know everything, enough anyways to, manipulate, prices, it's very hard for the market to find its true fair value. So I think it'll eventually get there, and I think it does need to get there. Of course, but it never needs to get there when you're long the market, and sometimes when the market decides to get there, it gets there pretty quickly, and everybody who thinks they're going to have a chance to get out, of course, is not able to get out. So we'll see how this unfolds. Of course, let's see how the next day or two. The insiders, sold into this hype about the tax reform and the new Fed chair being the super dove, or a dove, anyways, those stories, do tend to be overdone, and corrections are usually pullbacks, usually do happen in some form. Just, recent history in the last year or 2, 3 years has been pullbacks, meaning 1% or so. Anything more than 1% is, out of the box kind of event. But maybe we're getting a bit back to normal now that now that central banks are trying to, or some of them are trying to, become a little less ridiculous in their policies.
We'll have more with Ted Dixon right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome back. We're speaking with Ted Dixon. Ted, has the Trudeau government stopped its attack on small business?
I don't know. I think they've kind of lost their bearings here a bit, and we'll have to see. I mean, I guess we certainly know we have a Governor General who decided that she was going to insult a big chunk of the population by rolling her eyes, talking about essentially those who believe in in God, and and we had a Liberal cabinet minister come to her defense in that, and so maybe that's changed the narrative onto social policy, if you want to call that social policy. Trudeau style. Look, I think they've got a values problem. They ran with these little phrases about protecting the middle class, and that's in shambles right now. It's in total shambles because of all these revelations about the finance minister's disclosures and holdings, and then the latest tax haven papers that came out, and there was some high profile liberals involved, that came up in that. On its own, if that story had broke about the tax havens, it wouldn't be a big deal. But the fact that it's broken after all of this other all these other problems they've had, it just kind of destroys their narrative even more. So they've got a problem. They're on the road to a minority government at best. They better recalibrate and better get, if they want to win a majority, just going to have to recalibrate their message, and hopefully that their recalibration isn't doubling down on attacking the business community in any form. They won based off of bringing a coalition of people together, and you don't win again by chopping off part of your coalition. So I have to think that they're going to tone it down, but we'll see. The budget's coming up, and we'll see. It really is amazing, though, that they were. Had they just done nothing all summer and had Bill Morneau gone to his villa in France instead of doing this tax push, the Liberal Party would probably be much better off. But in any event, they chose to a different road, and we'll see what the next turn is.
Is the Fraser Institute correct in saying that instead of helping the middle class, that under the Trudeau government, 81% of middle incomers will actually pay more?
Well, I haven't read that report, and I think it really depends on individual circumstances. I think in any kind of situation where you're taking away some tax credits and broadening the benefits, there are going to be some losers. Whether it's that much, I don't know. But in general, the fact of the matter is that the Liberal government has shifted, the tax system to favor lower and so lower middle income families. Okay, and you can agree with that or not. I mean, that's kind of their policy path they've chosen. And there are others though that haven't done as well under the Liberals, and their taxes have gone up. So it really depends how you kind of phrase those. And define your study on how that goes. But, there are winners and losers in any tax reform measure, as Americans are finding out right now, too.
We'll have more with Ted Dixon right after the break.
Hi, I'm Douglas Mason, President and CEO of Magnum Goldcorp Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Ted Dixon. Ted, what kind of measures should the federal government be taking right now to help the Canadian economy prosper? And also, I've seen, conflicting statistics where it's either getting better or it's contracting.
Well, if Bill Morneau and Justin Trudeau were to call me up, which they won't, which of course they're not going to do, and say, "What should we do?" I would say hit a reset button and do real tax reform and launch a tax reform commission or something of that nature, and do real consultation, broad consultation. And look at the whole thing, and do bipartisan, like they're doing the trade, like they're doing within the NAFTA negotiations. Reset the whole, try and reset the narrative. Stop being, stop doing what the Conservatives did in the later years of their mandate, and trying to, put one part of society against another. Canadians are sick of that, and that's why one reason why the Conservatives lost, and it's a reason why the Liberals are unlikely to win a majority government if they keep that kind of narrative going. Now, in terms of the Canadian economy, I think the Canadian economy is doing fine. There's a bunch of the perma bears came out of the wilderness with the GDP number that was in contraction for 1 month. It's 1 month. There was some major projects that impacted those numbers. I'm not the least bit worried on the current direction of the Canadian economy. The biggest risk, of course, is NAFTA, and also the Trudeau government continuing to, if it restarts its narrative, its hostile narrative towards business, you call it small business, whatever business, it's just not a winning move. So, there are some risks, but, assuming those risks don't materialize, the Canadian economy should be doing all right. I don't see a big problem there. It's nothing to get worked up over at this point.
Amazon announced it would, have 1,000 job expansion in Vancouver, not their second headquarters, but just a general expansion in Vancouver. Are these real good jobs, or are they warehouse workers?
No, they're coming after our talent. No, these are good jobs, and Amazon knows a bargain when it sees one. And Vancouver, there was a study done last year. I forget the name of the company, but I believe it was a large real estate organization that has offices around the world. But looked at 50 centers in North America, in terms of attractiveness for technology innovation, and they found that Vancouver had the lowest wages. We have one of the highest housing prices, but they have the lowest wages, and so we have great talent. I mean, we've said this on the show over and over again that one of the backbones of the Canadian economy are the people, and how we've invested as individuals, and as a society in education and good education. And, Amazon knows that. I mean, and that's why this whole thing about the headquarters is, you have to take it with a big grain of salt. They know where the talent is. They don't have to do an RFP. They know that Vancouver has, a good selection of high-tech talent, and, we're second to none on that, and that, we're a lot cheaper than some other major tech centers. So it's a smart business move for them to do that for sure.
I just wanted to ask too about copper. Is that a good indicator of how the world's economy is doing? Because I mean, it's just coming off record highs right now.
Well, we're keeping a very close eye on copper. I mean, it is challenging. It's multi-year highs. It's having a tough time breaking out into really kind of new decade highs like we've seen in lumber. So we're keeping a very close eye on it. Let's keep a close eye on it. In terms of what our insiders are telling us, they are still favoring these industrial-based metals over pure gold plays. But we've seen a lot of buying still in the pure gold area. The gold insiders still see this as this kind of calm here in the gold market as buying opportunity. So, we're still pretty upbeat about the outlook for the basic materials area in Canada. But, let's keep our eye on copper, because if it breaks down here and doesn't manage to move up into new highs, then it could be telling us something that things are going wrong in the global economy. We don't see that right yet, but there are a couple of warning signs. Credit spreads were doing very well, very low. Now we've seen a little tick up here in high yield rates and some emerging market rates. So we'll have to see if this is just a hiccup over the next few days. But certainly gold, it looks like it's finding a base, and we'll have to see if copper leads it higher, or if copper, if it stumbles here, then that would certainly be a concern.
Some people have also said to me, gold bugs who get pretty excited with price rises have got bored with it and instead are looking at cyber currencies because they're skyrocketing.
Well, I think cyber currencies are not only competing with gold, but now I believe they're competing with the U.S. stock market. So this is another interesting development. Jim, we kind of had a feel of this with the marijuana stocks a year or two ago in Canada, where there was this sort of euphoria, jump on the bandwagon. But you know what? I think that's nothing compared to what we're starting to see in cryptocurrencies. I mean, if there is a major bubble blow off here, it could very well be in cryptocurrencies. For the true gold fundamentalists, we just sent out our Gold 20 report to our subscribers for the month. It's lying in wait. Look, for gold to make its move, you want to see a fundamental move, and having momentum players come in and chase it up for whatever reason, is not healthy for the whole gold market. So to see some of those players move off into cryptocurrencies in the longer run, or in the medium run, not even the longer run, in the medium run, is probably good for gold, because if you do have a blow off in the cryptocurrencies, people will go back to gold as being a more stable source of value protection, and store value. So, gold investors will have to be patient here, I think, and let's just let the cryptocurrency game play out. It's hard to tell whether we're in the late innings in that, or the middle innings. I don't think it's the early innings, though. I think we're well on the way here to, some sort of peak, but how far that peak is, who knows?
Ted, thank you so much for chatting with us.
Well, thanks for having me back.
Our guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com.
If you have any questions for the show or our guests, they can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.